There's no Bitcoin on exchanges. What needs to happen, I believe, is whatever is minted on the day needs to facilitate global trade. So if we look at what those numbers look like today, you've got roughly 6.3 trillion in global trade, and there's 900 Bitcoins minted today. So if you divide 6.3 trillion by 900, you basically get to a $7 billion Bitcoin.
Outrageous numbers. Before we even jumped on a call, you were telling me how that was conservative, Peter. So I'd like to open up the bullpen for you and let you educate the listeners on why that could potentially even be conservative. So most people call me crazy when I say I believe Bitcoin can hit $64 million before 2030. And those people who do call me crazy, they're probably going to turn this podcast off, because I am joined with a special guest who believes Bitcoin could hit $7 billion per coin. And today we're going to walk through Peter's amazing 6-step framework that actually backs up that extraordinarily bullish price prediction for Bitcoin. So Peter, I think a great place to start today's podcast would be to maybe talk about why you believe Bitcoin is a triple point asset.
Really good point. Well, I think Bitcoin is the first triple point asset we've seen. And so to take a step back, what is the triple point? In thermodynamics, the triple point is where an element can be in all three states at the one time. So if we think about water, it's, it can be water, it can be steam, it can be ice. Those are the three states that it can be in. And when it's in all three states at the one point in time at the same place, that's effectively called the triple point. So under certain temperatures and pressures, you can basically have water in all three states at the one time. And I look at Bitcoin as the first triple point asset. So what do I mean by that? Basically, for the first time in history, we have one asset that is serving all three functions of money at the one time. So we have Bitcoin as a store of value, we have Bitcoin as a unit of account, and we have Bitcoin as a medium of exchange.
It's so simple when you put it like that. And you kind of make the case that Bitcoin is the best medium of exchange we've ever seen, the best store of value that we've ever seen, and the best unit of account we've ever seen. Would you like to maybe compare Bitcoin with gold and all of the other monies that we have seen, and why Bitcoin is so superior in each of those three dynamics?
Sure. And I think it's relatively simple. And this comes down to understanding some of the unique tech innovations that come with Bitcoin and how they apply to the functions of money. So if we look at the first function of money, which is probably what most Bitcoiners are here for, it's typically effectively store of value. So what makes a great store of value? Well, that basically means something that basically is very hard to replicate, something that's going to hold its value over time. And typically for the last 5,000 years or more, gold has taken the crown as the preeminent asset for store of value. So currently that's, a 10, $14 trillion market cap. Pick your day as to what the value of that is. But that's been a really good store of value in historical terms. Enter Bitcoin, and Bitcoin, I think, is superior with the tech innovations that have come with Bitcoin on two fronts. Firstly, you have absolute digital scarcity. So absolute digital scarcity is an improvement on gold for two reasons. Firstly, there is effectively zero inflation once we get to the end of the block reward period. But that's 100 years away, and in the context of historical terms, 100 years really isn't that long. So it's a better store of value because it's got a lower inflation rate than gold. And more importantly, or just as importantly as that, a key innovation with Bitcoin that I don't think a lot of people really comprehend is that it's seizure resistant. Now, this is the first asset ever that we have had that we can store in our head and walk around with. That represents a huge deal, because all of a sudden, this is the first asset in history that you can actually go to your grave with. Now, that's a big deal from an attack vector, from avoiding any threats or a $5 wrench attack. All of a sudden, now people have to negotiate with you if they want your goods. So this is the first time in history that's happened. Previous to Bitcoin, if someone wanted something that you had, they simply pointed a gun at you or a spear or a knife and said, give me what you've got. And if you wanted to continue breathing, you just handed over what you had and you went on your way, and you just hoped you walked away with your life. That was the payment. Now, for the first time in history, you can literally take those assets to the grave with you. And that represents a huge increase, I think a huge utility increase in the function of money when it comes to store of value. So those are the two tech innovations when it comes to store of value. When you look at medium of exchange, a huge improvement on medium exchange, I think, is the fact that it's censorship resistant. And I just want to be mindful that I don't have any political leanings on this, but talk about, when Russia was excluded from the SWIFT network, that was a huge a paradigm shift in geopolitical and banking terms. I think, you've talked an enormous amount about this. And I think that, the second and third order consequences down the road are yet to be seen, and they're going to be big. But you've excluded a nation state from accessing their capital. And this is an improvement on, our existing medium exchange, that basically you cannot be censored from your money. And you couple that with seizure resistant, all of a sudden, you can't be stopped from transacting. You can't have it taken from you. The other thing, which I think is really important from a medium exchange perspective, is that with an immutable supply and issuance, not only can you audit every single Bitcoin that's in the system yourself, so you can self-verify everything that's in there, but you have got a supply and issuance schedule that you know exactly what's going to happen at certain points in time. And excuse me, what that allows you to do is build a very solid economic framework. And I'll just put into historical context the last 3 years what we've been through from a money issuance perspective. We're suffering now inflation from ramifications or the implications of what happened 2 to 3 years ago with the money printing. We saw in very short order, less than a year, 40% of the money supply be printed out of thin air. That then created inflation. And so we had a 40% increase in less than 2 years. And then over the last 12 months, we've seen a 6 to 7% reduction in the money supply. So all of a sudden, this variability in the issuance of money has huge downwind or downstream consequences for economic decisions. And this is something that's very difficult because you've got no consistency of what's coming when it comes to the media exchange of our global reserve currency, the US dollar. So I think it represents an upgrade because you now have an immutable supply and issuance, which is basically baked into the protocol. It can't be changed. So it gives a lot more economic stability, and it probably helps solve a lot of the problems that we're facing at the moment, which is duration risk. The final thing, and this is probably the most boring thing, but for me, this is where the most juice in Bitcoin comes. And it probably stems from an accounting background at university, but everyone hates accounting. Even accountants hate accounting, but the immutable ledger is a really important upgrade on our double entry ledger system than what we've got now. So, excuse me, when you put all of these things together, what we have is we've effectively got an upgrade on our store of value. We've got an upgrade on our medium exchange, and we've got an upgrade on our unit of account, which are the three functions of money. So all of a sudden we have one asset to rule them all when it comes to this function of money. And that's where we get to that triple point asset. So we've got Bitcoin serving as the first triple point asset, that it serves all three functions depending on where you are personally with it.
That's a phenomenal outlay of how you look at Bitcoin. It's funny you mentioned that, it's a bad thing that the money supply today is so variable. I don't know if you saw it or not, but literally 15 minutes before we jumped on this call, our good friend Nicholas Taleb was on CNBC bashing Bitcoin. And he was saying, look, it's a good thing that the Federal Reserve is actually doing what the Federal Reserve does. Taleb actually said the Federal Reserve is transparent. Bitcoin and crypto is not. Obviously, what do you think of those thoughts, Peter?
Nicholas Taleb, what an intellect. Firstly, I'd like to pay homage to Taleb. He's, a mega brain, and he's given us so much. He's, just some of his thoughts, some of his books have been outstanding. Skin in the Game comes to mind, Black Swan, two major, foundations of that's formed a lot of Bitcoin thinkers. So I don't want to throw the baby out with the bathwater. Sadly, I think a spat with Safadine has basically rotted his brain, and he doesn't quite, or he either hasn't done the work or refuses to do the work when it comes to Bitcoin, because what he just stated there is absolutely wrong. So, the Federal Reserve, I understand what he's saying. The Federal Reserve is there to try and solve, fluctuations in the economy. But what I think, if you take a step back and look at that and go to the problems that they're trying to solve, are the problems that they caused to start with. So there needs to be an acknowledgement of where the problems came from. And if we look at where this inflation comes from now, which is basically the major issue in the economy that we're facing, the inflation that we're facing today came from the money printing that they did 2 to 3 years ago. So it's like, well, maybe if you just didn't print the money, we wouldn't have the inflation problem today. So, I think to Taleb's point, I can demonstrably prove to him that the issuance, supply, and the ledger of Bitcoin is immutable. That's far more solid than changing the whims of the issuance and supply when it comes to the Federal Reserve. So I think it can be proven, literally, without a reasonable doubt, that Bitcoin has a far more stable issuance than the Federal Reserve. So maybe he just needs to do more work, do your own research. And I think the Bitcoin community is very hostile to him. So maybe on more personal reasons, he won't spend the time to investigate further, which is a shame because I'd love to have him on board as a Bitcoiner. And I think he'd be a great advocate. And all of his work lines very nicely with Bitcoiners. So it'd be a great win to have him on board.
It really would be. As much as I like to make fun of Taleb, his ideas and concepts are phenomenal. I've read Black Swan, it's a great book. I'm obviously very familiar with the concept of reflexivity and, being anti-fragile. And Bitcoin is everything Taleb writes about, which is what's so frustrating. But we'll leave Taleb for another day. I want to discuss something else you mentioned earlier. You're talking about how transformative it is that you can actually take your Bitcoin to the grave with you now. And something that you've talked about lots and actually given me an epiphany or two about is this concept called time locking. So maybe we can start at a very low level. And for anyone who's unfamiliar of what time locking is, you can explain what that is and just how important that is for Bitcoin and its potential valuation framework in the future.
Sure. So time locking is a really simple concept. And let's just use something that we all understand is like a safe, like at home. And a time lock, you can put a time lock on your safe at home, which basically says, once I enter the code into opening this safe up, it's going to take 24 hours to unlock that lock. And so basically you're putting a time lock on opening that safe. Now, the same thing can be done for Bitcoin in that you can send your Bitcoin to the future, a block height or a date in time, rough date in time because it's really based on block height, but that's semantic. So you can send your Bitcoin time lock to the future. And what this means is that you get your Bitcoin here and you literally send that into the future here, and it leaves this wallet today. It basically sits in limbo, slow motion, waiting for that block height to get reached before it falls into this wallet. And now there are some very big implications, I think, from a financial perspective and a societal perspective, having the ability to do that on many fronts. Firstly, I think it gives you the coldest of cold storage. And as a good friend of ours talks about Knut, he describes Bitcoin as being element zero. It should be on the periodic table. And when I discussed this with him, he talked about element zero at absolute zero. So when you time lock your Bitcoin, it is absolutely the coldest of cold storage that you can make. Now, I'm not talking about the time locks that you can unwind. I'm talking about the time locks that are permanent until the block height. So you can have the private keys to that wallet, both wallets that you're sending to and from, and you still can't break that time lock. Now that represents a huge upgrade in security. So if someone literally has a gun at your head and says, hey, give me your Bitcoin, it's like, mate, sit down. I've sent them 5 years into the future. We're going to have a few birthdays, a few Christmases together. We're going to get to know each other. And then when they drop, I'll give you what you want. But like, if you shoot me, you're going to get nothing. So let's get to know each other and live a little. So I think from a personal security perspective, there's some big implications there. From an estate planning perspective, and which is, basically a lot of what I do, I think it solves a lot of problems for, very wealthy families that, they want to see their legacy basically endure into the future. Well, this is the first asset that is basically above the law, that they can basically send something into the future, and regardless of any legal decree or notice, the law is powerless to stop what has been instituted on a cryptographic basis. Now, that has huge implications because what we're going to fast see is that cryptography trumps any legal state. And this is going to be very difficult, I think, for the legal profession and the governments to basically understand that, in the universe of universal laws, cryptography is at the very top of it. and then all of our man-made structures are going to be sequestered under that. Now, they don't know that yet, but they're going to fast find out that regardless of any legal decree that they make, Bitcoin is going to Bitcoin.
Something that concept of cryptography coming against the state, I think that's going to be a really fascinating one. Like, one of my favorite books is The Sovereign Individual. I've read that puppy 2.5 times. It's a pretty dense book, but that talks about how things like digital technologies are going to significantly attack and alter the power structures that we are living in today, such as law and the size of government could potentially be in big limbo or big danger. And when we have these things like Bitcoin, how do you think governments, this could be a good time to get into how governments might try to react against Bitcoin in the future? How hard do you think they could try to fight this kind of cryptography?
I think the smart ones aren't going to fight it. They'll adopt it, because there is a very low risk in adopting it, and there is a very high payoff. Much like the personal preference that we've made in basically adopting Bitcoin and buying it, there's very little downside and there's a huge potential upside. I think because governments are fundamentally made of people, when the education basically, transcends, to a broader base, governments will, or the smart ones will adopt it. And it makes perfect sense. You think about it, the governments can print money ad nauseum for zero cost per marginal dollar. Literally zero cost. It's basically the cost of pushing the extra zero on the money printer, and it's digitally printed. So I think there's no downside to them doing it, and there's all the upside to gain. So I think you're going to have, smart or forward-thinking governments are going to adopt that and really try and integrate that, because it's effectively no cost to them and all upside. Basically, it's a free option on the future for them. And I mean, literally an undated, unlimited free option on the future. So let's print money that costs us nothing to go and buy something that costs a lot of money. The difficult ones, or the governments that are less forward-looking, I think are going to have a major problem with it. And I think the greatest example we've seen of this is China. 1.2 billion people in the largest totalitarian regime was very hostile to Bitcoin, has basically cancelled Bitcoin multiple times. And, so many times, in fact, that they made a South Park meme about it, which is one of my all-time favorite Bitcoin memes. China ban Bitcoin, quick, sell. And what to make light of this, but, it's a serious point. The world's most powerful totalitarian regime was unable to stop Bitcoin. They were able to crack down on exchanges. They were able to kick Bitcoin miners out. Turns out the Bitcoin exchanges are back, and so too are the Bitcoin miners in China. So, this is the most powerful, oppressive regime that we have on Earth, potentially. Depends who's talking or looking. But they were unable to do it. So it makes me think, how is the US going to do it? The land of the free, home of the brave. I don't think the US is going to do it. And so if the US isn't going to do it, and we've seen every sort of regulatory tip of the hat to Bitcoin basically being excluded from a regulatory framework, I kind of think it's been given the green light. So we're not going to have to worry about that. So I don't think we're going to be, really heavily fought. I think it's then going to be an interesting game theory to see who is the most forward-thinking government and how are they going to capitalize on it? Because all of a sudden it's a game of leapfrog. And this is where probably I'm reminded of, basically an analogy Ayrton Senna had. He basically said it's, on a dry track, you can maybe overtake 1 or 2 people, but on a wet track, you can overtake 14. Now, the economic situation we're in right now is a very wet track. And I think Bitcoin represents the opportunity to overtake, from a nation state perspective, if they're early adopters, 13 or 14 cars out of a field of 20. What an opportunity. So there's very little downside, huge upside, and we're starting to see that play out, the fruition of basically a lot of hard work with El Salvador play out, that, it's looking like a very good decision for them.
It certainly is. And I think it'd be very interesting over the next couple of years as Bitcoin goes through its halving in 2024, whether other nation states will copy what El Salvador has done. We've already, begun to see the early signs of their success with tourism numbers up by like 90% in 2022 and early 2023. But I think once you do start to see those treasury reserves actually get into the green and El Salvador begin to make some money, and even just yesterday, actually, I saw a headline pop out. They're building the airport in Bitcoin City right now as we speak in El Salvador. So it looks as if everything's trending in the right direction. I wouldn't be surprised to see a few other nation states copy what El Salvador has done in this next halving cycle. Peter, talking about governments and Bitcoin, you have a pretty interesting theory. I can't remember which podcast you mentioned it on, but you said there could be a day where governments might decide to actually back their government debt by Bitcoin, say by 1% or 5%. And we could get ourselves into a situation where there's no Bitcoin left on exchanges. So I'd like to throw that, two-pronged question at you there. What does this transition look like with governments potentially trying to back their government debt by Bitcoin? And what does this mean for Bitcoin and its monetization path?
I think it really talks to the gradually then suddenly. And this is where Bitcoin is basically a ground up movement until it's not. We're here for the early days. It's effectively a cottage industry Bitcoin, and it's been bootstrapped on a very disagreeable, strong-minded, opinionated minority of less than 0.5% of the world's population, I think, would adopt Bitcoin and actually have that. I actually think it's more like 0.1%. And, basically the plebs have basically supported Bitcoin, dollar cost averaging, saving every day in it, basically supporting it, and that's their focus. And that's been brilliant. But the suddenly part comes, I believe, when you have a nation state, major corporation, or a huge entity basically turn around and say at the press of a button, we are now going to adopt that and we're going to put substantial assets into it. And I think, Bitcoin's a relatively small asset class. It's $500 billion. You basically press the button. Well, it's $500 billion, call it 600 billion roughly, given we've had a 20% bump in the last week. So, you compare that to the bond market, take your pick on what the actual number is, but let's just say it's roughly 300 trillion. Would that be a fair assumption that, the bond market across all bonds, basically about that number?
I'll give you that.
Thank you. What's really interesting to think about this is that, the average term of those bonds is basically 5 years. So you've got roughly $60 trillion expiring every year that needs to be refinanced. And to coin a term from Kyle Bass, a rolling loan gathers no loss. That's great, but we're kind of at the part of the movie where basically there are going to be consequences and it's going to be difficult to refinance these loans without other incentives attached to it. And this is where I think a lot of the gold bugs talk a very good game, where governments are going to have to back their bonds with a 5% or a 1%, 1 to 5% in gold. And I think, well, that's all good and well, but there's no way to ensure that they've got the gold. There's no way to independently verify that it is gold. And there's no way to confirm that they are going to pay that out at the end of the bond expiration. Mm. So I look at that and I think, if governments are smart, they would put Bitcoin in. Or if investors are smart, they would ask the governments, hey, we're going to buy these bonds, but we want to have 5% time locked in Bitcoin so that you can't screw us out of it and we can have full visibility on where that Bitcoin is. And so I look at that and I think there's $60 trillion per annum that gets refinanced in these bond markets. If you had 5% of that put in, that's $1.2 trillion that would basically be put into Bitcoin as collateral for those future bond payments. Mm. Now, all of a sudden, that's basically double the current market cap of Bitcoin. And if you try and squeeze $1.2 trillion per annum into $2 million of available coins, all of a sudden, this is where you get to, your number on that multiplier, the Bitcoin multiplier. For every dollar in, it's $2 out, or whatever the number is. All of a sudden, that changes dramatically. It's not $1 in, $2 out. It goes $1 in, $20 or $50 out. So this is where the numbers get really crazy, because when you understand the enormity of the other markets and how little in comparison to those Bitcoin actually is, this is where you get the exponential. And this is where I think Bitcoin really is the first exponential asset that I've seen.
So I wanted to quickly interrupt today's interview with Peter to let you guys know about something urgent going on in the Bitcoin space. The largest exchanges, Coinbase and Binance, are going bankrupt as we speak. So if you have Bitcoin sitting on an exchange, today is the day you need to get it off an exchange, and you need to find yourself a great Bitcoin-only hardware wallet to put those coins in. We recommend the amazing Bitbox O2 hardware wallet. It's one of the cheaper wallets in the space. It's one of the fastest and easiest wallets to use. You can literally get up and running in under 2 minutes with one of these puppies. You guys can get 5% off one of these little Bitbox O2 hardware wallets if you use the link in the description of today's video. And if you need help taking those coins off exchanges and putting them into your own self-custody, you can reach out to us at CoinBeast Connect. That's what we do. We are a Bitcoin-only educational company that powers this Money Matters YouTube channel. So if you need any technical help with Bitcoin, whether that be taking custody of your coins, running a node, or even setting up a Bitcoin mining operation, we have a Bitcoin Pro that we can connect you with over on CoinBeast Connect.
Swan Bitcoin, the best place to DCA and buy Bitcoin. They're going to give you $10 of free Bitcoin if you sign up with them.
So you can check us out at the link in the description of today's video. And with all that said, let's get back into this rip with Peter.
I love hearing your maths, Peter. I want to dive into a little bit more of your maths. What do you think happens if there is no Bitcoin left on exchanges in the future?
That's a great question. And I think, the logical conclusion of that, how would we get there? I think there's multiple ways that we get there. Basically, you've got nation states hoarding Bitcoin, wealthy people hoarding Bitcoin, literally people all over the world hoarding Bitcoin, because this isn't, an asset for one person. I believe this is an asset that can serve 8 billion people. So the market is 8 billion people. What happens when there's no Bitcoin, which I think is, a little bit far-fetched, but it's not outside the realm of possibility. If there's no Bitcoin on exchanges, what needs to happen, I believe, is whatever is minted on the day needs to facilitate global trade. So if we look at what those numbers look like today, you've got roughly 6.3 trillion in global trade. Now, admittedly, a lot of that is made up of foreign exchange markets and the rest of it, so we can deduct that, but let's just use that number now. Actually, use whatever number you want to. I'll use 6.3 trillion. And there's 900 Bitcoins minted today. So if you divide 6.3 trillion by 900, you basically get to a $7 billion Bitcoin.
Outrageous numbers. And I think, sorry, before we even jumped on a call, you were telling me how that was conservative, Peter. So I'd like to open up the bullpen for you and let you educate the listeners on why that could potentially even be conservative.
I thank you for this. And this is where I sort of sound like I'm a little unhinged, but I'd really like to talk about the framework for coming up with a valuation model and allow everyone to input their own numbers into it, because they can look at the numbers themselves. And if we present that argument and framework in a way that everyone can follow along and disagree or not disagree, any rebuttals to it, I'd be more than happy to hear. Please reach out to me. My DMs are open on Twitter, and we'll have that at the end of the show. But the framework for valuing Bitcoin, I think, is, basically studied markets, been in markets I'm in my third decade now. Prior to that, grew up in a household of small to medium-sized business, talked about money, and, think I've got a relatively good understanding and grasp of economics. So I just want to go through a number of economic terms with you and how that framework's built out, so we can basically follow the bouncing ball on that. So if you look at some conversation that we had earlier, which was Bitcoin's the first triple point asset, I think the limitations in the valuation frameworks that we're looking at Bitcoin right now with is that we think of Bitcoin as a linear accretion of value. Now, what does that mean? Basically, what that means is, to the arguments earlier about being the first triple point asset, I think that's an irrefutable argument that Bitcoin is the first triple point asset. It's better than gold, it's better than the US dollar, and it's better than the double entry ledger system that we've got. Now, what people I think get stuck on is that they think, well, if Bitcoin captures the gold market, it's 10 trillion. If it captures the US dollar market, it's 100 trillion. And by the way, I don't think that's going to happen for a very long time, and it's not really important to this conversation anyway. And if it captures effectively the unit of account market, which is roughly 2,000 trillion, then what you do is you add up those values and you divide it by the number of Bitcoins. So roughly that works out in my mind to $2.1 quadrillion divided by 21 million, and you get to $100 million Bitcoin. Now, I think that's all good and well for thinking about the valuation framework in a linear sense. However, that's not that doesn't show an understanding of economics and the dynamics of effectively competitive tension when you basically have competitive tension between the functions of money. And so this has never happened up until Bitcoin. So you've never had really gold competing with US dollar and competing with unit of account. But for the first time in history, you now have store of value actively competing for Bitcoin, while at the same time mean of exchange is actively competing, while at the same time unit of account is competing for it. So rather than thinking it's store of value plus mean of exchange plus unit of account, the competitive tension creates a dynamic that is going to lead to effectively a parabolic spike. And what I think a better way of thinking about this is that it's more like store of value multiplied by mean of exchange multiplied by unit of account, because you now have competitive tension across three functions of money. Now, in addition to that, you also have competition for the first time in history between 8 billion humans for that single asset. This is the first asset that is a fundamental need, not a want. But only 0.1% of the population really understands that now. And I'm reminded of a comment from Zig Ziglar, a famous American sales trainer. And he talks in this Southern drawl, and he talks about money not being the most important thing on earth, but is damn close to oxygen. And I think when people figure out that Bitcoin is better money than money, all of a sudden we have some competitive tension that leads to a framework for Bitcoin that we don't really understand. It ends up being an exponential asset, and humans in particular are very good with linear. We're horrible with exponentials. Our brains don't work in logarithmic terms. So that's why I think our little brains have difficulty in understanding that value.
Yeah, the inability of our minds to grasp exponentials is something that's very common. And, every technological revolution we've seen over the past 250 years, every single time the masses always miss it because they don't think in exponentials. They don't think, okay, in 10 years, steam engines and railways are going to completely replace the horse and carriage. And it's Bitcoin, I think, is going to do something very similar. Something else that you talk about that most people don't understand is this idea of Bitcoin being a quantum asset. You're the first person I've ever heard describe Bitcoin as that. So why do you call Bitcoin a quantum asset?
I think it has a number of implications, Bitcoin being a quantum asset, and sort of the setup to Bitcoin being, or any asset having the ability to be a quantum asset. There are a number of things that it needs to have in order to qualify for that. Firstly, it needs to be digital. Secondly, it needs to be digitally scarce or have absolute scarcity. It needs to have the ability to be seizure resistant and censorship resistant. It also needs to come with an immutable ledger supply and issuance, so you can't basically fuck around with any of it. And ironically, they're all the technological innovations that fundamentally led to Bitcoin, and Bitcoin being the first triple point asset. And so, I call Bitcoin the first quantum asset when you overlay a triple point asset into a time lock. So in order to have a quantum asset, you need to have a triple point asset that serves the three functions of money, and you need to be able to time lock that basically into the future. So if you think of conceptually how time locking works, with a Bitcoin, you've got it in a wallet here, you send it to the future here, and it's suspended in a quantum state, basically a superposition where it's neither here nor there. It's effectively Schrodinger's Bitcoin. It's not in either places, but it's at both places at the same time. So depending on where you're looking at it is where it's going to be. And this is why I think it's basically a quantum asset on many, many fronts. Firstly, from that sort of superposition, tip of the hat to quantum computing. But then secondly, when you think about it, it's the first quantum asset because, and maybe probably a better term for it would be quantum resistant, because it's got an immutable ledger supply and issuance, you can basically send that through time completely unchanged. It's completely immutable through time. So you're not going to send it through to, say 5 years into the future and wake up and there's 42 million Bitcoin. There's 21. That's it. That's all they're ever going to be. And so when you think about that and the fact that there's only 0.5% adoption, so really from a monetary perspective, this thing can only get bigger because you can't destroy it and you can't alter it. All of a sudden, this is effectively a time-proof asset. And that's why it's a quantum asset. You can basically send any quantum of it through time completely unadulterated. So if you've got 1 Bitcoin, send it 5 years into the future, you're going to have 1/121 millionth of that network. So it's I find it a mind-blowing concept to think about, and the ramifications of that from a societal perspective are going to have big implications, because from a legacy planning perspective, we're going to be able to send Bitcoins into the future for our future generation, like our great grandkids. And this is something that we've never been able to do before.
Yeah, it's a crazy thing. I think it was you who did mention the concept of Schrodinger's Bitcoin on a podcast a little while ago. You hit 2 birds with 1 stone there with that answer, because I was going to ask you about that. Now, something else that I do want to ask you about as well, which is a little bit of a change in pace, is you've kind of talked about how banks would like to actually treat Bitcoin as either an asset or a currency. I would love for you to explain the differences and why a bank would like to classify or treat Bitcoin as one or the other, because it does have pretty big implications with what a bank can actually do with that Bitcoin.
Yeah, and so this, I think, comes down to, for Bitcoin, as we look at 2 key figures in Bitcoin. You've got Michael Saylor, who says it's property, and I believe him when he says it's property. And then you've got Bukele, who basically has created a whole economy on Bitcoin with El Salvador, and he's calling it a currency. And so there are these 2 competing thoughts around, is it a property or is it currency? And that old adage about how do you know if you've got a good accountant or not? Basically ask them what 1 + 1 is. If they're any good, they'll look over their shoulder and they'll whisper to you, what do you want it to be? And in that same vein, Bitcoin is basically both property and currency at the same time. But the treatment of each gets treated very differently from a bank perspective. And let me just run through how that works from basically in banking terms, in really rough, high-level stakes. So if it's presented as property to the banks, they basically have a charge over that property, and they are no longer able to use it because that is someone else's property. So if you think about a title deed, when you borrow from the bank and you give up your property title deed as security for a loan, they basically have the title deed. They hold the title deed, they register that with the Land Titles Office or whatever the regulatory body is, and they basically put a legal caveat on that title deed saying, hey, we've got money owing on this. No one can buy it without clearing this debt first. That's all good and well, but the banks can't use their property to then go and leverage up. So I look at this and think Michael Saylor's view on property is correct. However, the banks will want to interpret it very differently, because if they interpret it as currency, what that means is they can then put that on their balance sheet, and we know that that is now our asset and their liability, and they can take that asset as currency, and then they can leverage that 20 times for future lending purposes. So they can rehypothecate that Bitcoin 20 times. Now, I understand what I'm saying is heresy in light of what we've seen in the last 12 to 14 months, but fundamentally, that's how banks work outside of crypto. And when they incorporate crypto, I think they're going to want to adopt Bitcoin as a currency, and that is going to give them the ability to then leverage that asset up 20 times to then make loans to it or with it.
Yeah, it's a scary thought. And it is interesting to watch these different parties label Bitcoin as different things. But, as you say, Bitcoin is just going to continue to Bitcoin, and we're just along for the ride.
Good.
Okay, now I want to ask you about your orange pilling story, because I thought, okay, if I knew Peter's family, Peter would have to be the most bullish Bitcoiner in that family, or somebody who studied Bitcoin for the longest. But I was shocked to find out that you've got a brother who's actually been in Bitcoin. So firstly, Peter, I would love to hear your orange pilling story, and then tell us a little bit more about Michael.
Sure thing. Well, I'm very fortunate to have very smart people around me. Got exceptionally bright father, great businessman, and my brother is equally as brilliant. So sadly, you're dealing with the runt of the litter. However, my orange pilling story starts maybe 12 or so years ago. And, Michael is a brilliant mind, has been in around tech for a long time. And back in 2011, he said to me, hey, there's this thing called Bitcoin. I think you should buy some. And I was basically running a family office, advising people on how to invest money, trying to reduce risk and, provide return in the best way possible. And I was arrogant and myopic in my worldview. And I basically had the arguments that basically every no coiner has in the development to a Bitcoiner. So I said, that's a stupid idea. That'll never work. Government will shut it down. Because it's technology, something better will come out. And then the resignation that took me a long time to figure out, sadly, that, oh my goodness, this is the be all and end all when it comes to this function. And basically I need to just buy it. So sadly, there weren't all of the great work that you do in educating people around this. There weren't, Luke, you weren't around 10 years ago to help me fast track my learning on this. Sadly, it took me 5 years to figure it out. And this is very fortunate. My brother basically had an exchange and a Bitcoin company back in 2013, and I got to speak to him every other day. And, basically he took me on that journey and basically answered all of my queries, concerns, and the rest of it, and slowly built up my knowledge. So I'm eternally grateful for my brother and being so patient with his older brother in helping educate me as to why I want to own some of this.
It's a beautiful story. That is so early, operating an exchange in 2013. That is one of the more early entrances into the Bitcoin space, that's for sure.
Yeah.
Something else that I would love to pick your brains about is a little bit of macro. We're both a little bit of macro geeks. So I would love to ask you about the Australian real estate market. I used to, look at it a little bit more closely than I did when I was living over there. But obviously in Australia, we were all fed the propaganda that, houses, there's nothing as safe as brick and mortar, mate. Just, property continues to go up forever. What is your synopsis on the Australian real estate market? And, obviously not financial advice here, but, what do you tell the people's money, the people who you manage their money? What do you tell them about the real estate market in comparison to Bitcoin?
I think it's all relative. And this is where sort of the two questions in one there are, how do you present Bitcoin as an investment to people, and what's happening with the property market? And I think, when you're investing in anything, it's never about the sole investment that you're making. It's also assessing what is the opportunity cost that you're missing out on by investing in that asset versus something else. And this is where, whether it comes to the Australian property market or, just about any Western global property market, fundamentally, we're all operating in the same space that, for the last 40 years, we've had interest rates basically on the decline. We've had asset prices on the incline, and we've reached a tipping point in the last, say, 12 months where we now have interest rates going up in the fastest rate in history. That has never happened like this before. And so when rates go up this fast, it has to have a knock-on effect to the value of properties, because one is a function of the other. If you have zero cost capital, then you can afford to buy, anything. And this is why negative rates don't really work. But if you have really high interest rates, then it's a forcing function on your decision making to determine, hey, do I really want to pay that much for a property when it's going to cost me at 10% per annum? I've got to basically repay the entire purchase price every 7 years in interest. That's a very, very costly price to pay. So what is going to be the return that I'm going to get on this? And this is where I think, in a broader sense, we are at a saturation level of debts across all asset classes, not just property, but stocks, bonds, property. And this is where, from a property perspective, when you've got rates move from 0.25% to 4%, that basically represents a 1,600% increase in the interest rate and the cost of capital. So it's now very expensive to hold a property. And typically what's happened in Australian terms anyway, when it comes to the commercial sector, resi's another thing, but commercial is probably the easiest to work, because there's simple and easy sort of guidelines to follow from valuing it. typically you had somewhere between a 3 to 4% premium over and above the risk-free rate in Australia, which was the Reserve Bank rate at 0.25%. So if the Reserve Bank rate was 0.25%, property was trading at a rental yield of 4.25%, maybe 5, and that's the best quality. Lower quality commercial properties, you might be getting up to 6 or 7%. So there was a 4 to 6% premium on owning property over bonds or Australian risk-free bonds. And then you fast forward now, the rate with the bank or the Reserve Bank is 4.1%. So that's now your risk-free rate. But commercial properties are still selling at a 4 to 5%. You know, the top quality properties are still selling at 4 to 5%. So you're not getting a 4 to 5% premium on your return. So I look at this and think that, you know, one of two things is, needs to happen, but has happened. You've basically had the risk of owning commercial properties gone up dramatically, and you're not being rewarded for taking that risk of owning the property. And at the same time, the cost of holding it has gone through the roof. So now you actually have to pay to hold the property, whereas before you received an income on it. So in my mind, I'm looking at this thinking, well, very plainly, short term, one of two things needs to happen. Either we need to see a dramatic drop in property prices to adjust for the increased cost of capital, so we can return the to basically a fair premium rental yield, or we need to have interest rates drop dramatically in Australia. And I can tell you that's not likely to happen because, historically speaking, Australia's interest rates typically range between the US and New Zealand. New Zealand being higher, the US being lower, because that's the risk-free rate of the world. And you know, if you look at it now, the US is at 5.1, New Zealand's at 5.5, and Australia's at 4.1. There is something severely wrong with this picture. You know, realistically, I'm looking at this thinking we need at least 4 more rate rises of 0.25% to get us over 5% and to get us in line with US parity. But it feels like things are about to break here, and doing that would fundamentally break it. So we had an issue, and this probably goes on to a much deeper conversation, but the Reserve Bank Governor of Australia, Philip Lowe, back at the end of 2021, basically said there'll be no rate rises till 2024. So at the time, that was common consensus and the rest of it. And basically, people took that as absolute gospel, that they went out and basically spent, over-levered, said, great, we're locking it in and we're all good to go. And then fast forward basically a year, not even, we've had basically the fastest rate rises in history, and we've seen the Reserve Bank rates go from 0.25 to 4.1. Now, this has meant that when you're borrowing money from the bank, your interest rates went from a rate with a 2 in front of it to a rate with a 6 in front of it. Ouch. Bad, very bad. And so I look at the Australian property market and I think, yes, property has historically always gone up. Is that a function of the depreciating value of the underlying currency? So you're getting leverage on the debt, or is it a function of the actual value going up? And I think it's probably a combination of both. But also, people conveniently forget that between 1930 and 1950, property did not go up. In fact, it actually dropped dramatically, and it took 20 years to get back to 1930 levels. So are we living in one of those times? I know you've done a huge amount of work on the cycles, and you look at 1930 and you look at where we are now and you think, well, 1950 to 2020, it's a 70-year cycle. It's kind of all lining up, right?
It really does feel like we are at the end of this long-term debt cycle. It's a pretty scary time to be living in, to be honest. If you haven't found Bitcoin, I sleep a little bit safer at night knowing I've got a little bit of Bitcoin. And something I definitely want to pick your brains about is this idea of Maslow's hierarchy of needs and how this potentially interplays with the Bitcoin halving cycle. Maybe for people who wouldn't know about Maslow's hierarchy of needs, we can begin there and explain what that one is, and then we can get into the more interesting Bitcoin relation or correlation that you've been able to draw on.
Sure thing. Well, Maslow was basically a psychologist who did a lot of work on what were our fundamental human needs. What did we need to function? And basically, he drew a pyramid, and he said at our most fundamental level, we basically need food and shelter. Is basically what it was. Actually, I don't even think we needed shelter. That was the next layer up. We needed shelter. After that, we needed connection, community, and then that ultimately led to the very pinnacle of our needs, once everything else was met, was self-actualization. So what did that mean? If I look at, say, Luke, you as an example, I feel like you are self-actualizing, because I look at you and think you're doing God's work, talking about Bitcoin all day, living the dream in Colombia, and literally pursuing your absolute passion. And I think, hats off to you. I just love that work. And this is where, when you think about those Maslow's needs hierarchy and how that then pertains to Bitcoin, and how Bitcoin can effectively help you scale up those hierarchy of needs, I think, for me personally, how it's worked is, I think, an investment into Bitcoin. I've basically, been in Bitcoin for a little while now, and I think that you invest in Bitcoin, and then each halving represents a leveling up in that Maslow's needs hierarchy. So basically, you commit some capital, and then within 20 years, you're basically getting to the top of that pyramid, where you're self-actualizing, doing fundamentally whatever you want to be doing, and living your best life doing it. Because what I think happens with Bitcoin is that, with every halving, basically you inevitably go down and do work in this space to basically educate yourself on, this risky, say that with inverted commas for those listening on the pod, this risky asset, and you realize that it's not that risky. And then the financial freedom that Bitcoin affords basically lets you, or allows you to move up that scale of Maslow's needs hierarchy. And personally, I believe that Bitcoin is an opportunity for everyone on earth to scale up that needs hierarchy in the fastest way possible. And that, to me, the price predictions are fun, but to me, that's where we get societal change. Like, that's a big, big impact. So for me, that's what excites me most about Bitcoin, thinking that that has the ability to change people internally, fundamentally make them better people, then scale up that needs hierarchy, which then makes them, wonderful citizens and productive people.
Peter, firstly, thank you so much for the kind words. I really, really do appreciate that. I'm just lucky I get to talk to brilliant people like yourself. So thanks again for coming on today. But I think that is the important part we really should be talking about. Like, Bitcoin money should be doing what money is supposed to do. We should just be able to save our wealth in money. That accrues value over time. As society is more productive, goods and services fall in price against our savings, and we should be able to actually go on this journey of self-actualizing at a far younger age. Instead, today we are told that it is normal to get a job at 18 and retire at 75. And they can say, yeah, you can live a couple of good years at 75. Just make sure you got $1 million in your pension fund or your 401k so you're safe. But they don't tell you that the $1 million has been inflating at 10% a year, because we're operating on this melting ice cube fiat system. It's really disgusting. I really don't like the fiat system, and Bitcoin actually enabling Maslow's hierarchy of needs to play out the way it should play out with money is a beautiful thing. And that's why we call Bitcoin a peaceful revolution. That's what it's all about. So for the listeners, I will actually add some images which was it, the 2-bit idiots that made you a couple of graphics with your concept?
They did. They put, God bless them, funny guys. And they put the graphic of the Maslow's needs hierarchy, then overlaid the halving on it. Basically, halving 1 is the first, second, third, fourth. So by, within 4 or 5 halvings, you're at the top of the pyramid. So God bless them for doing that. I was very appreciative.
They're a great podcast too. So if you are an Australian in particular, definitely make sure you tune into the 2-bit idiots. Peter, we have covered a lot of ground today. We've been going for more than an hour. I want to be respectful of your time. So before we wrap this thing up, are there any final comments that you might have for the listener, or any rabbit holes you think that we haven't explored today that you would like to delve into?
I could talk to you all day, Luke. So it's always a pleasure. I think what I would, a final message, if I could, is, one thing that's particularly important to me is making sure that people get their Bitcoins off exchange. So it's the only message that I would strongly suggest people do, because for 2 reasons. Firstly, if you're invested in Bitcoin and you leave your Bitcoin on the exchanges have the ability to, rehypothecate your Bitcoin or loan that out to short sellers and effectively muck around with the price on spot. So the number one thing you can do for helping the number go up is to take full control and self-custody of your Bitcoin. And on a selfish level, I would love to see that happen, because with BlackRock about to open an ETF, I would really like to see them have to pay a lot of money to get Bitcoin to fill that. So one of the things that we do here is basically help people self-custody their Bitcoin. I strongly urge you to do that. And if you need any help, please reach out. I guess if we can put the link to the website in the show notes. So if people are struggling to do that, there's a heap of resources there. And then if they want our help, they can literally contact us to help them through that. So that's the only message I've got. Not your keys, not your coins.
That's the only message that counts. It's a beautiful message. Like obviously Binance, the last time I checked a couple of hours ago, the US SEC is trying to freeze all of their assets, international assets. So you have any money on an exchange, whether it be Binance, Coinbase, none of it is safe. Maybe we could delve down another rabbit hole of the BlackRock ETF in part 2 another day, Peter, because I think it's really interesting what's going on there, especially considering Coinbase is their custodian. So not your keys, not your coins. That's a beautiful message. We will definitely be linking to the website down below. Where can the listeners find you on Twitter, Peter? Because I really do think you are criminally underfollowed on that platform. So I would encourage the listener to 100% get on over to Twitter and give Peter some love and follow him. He's a great follow. What's your handle, Pete?
Peter BTC Advisor, and that's Peter BTC Advisor with an ER. So follow me there. My DMs are open if anyone wants to chat. And if anyone has any critical feedback on that valuation framework, hit me up. I'd love to discuss it with you, but I haven't really had too much pushback. So I'm waiting.
So as Foss says, send the hate mail, send it through. You can send the hate mail to me as well. Peter, thank you so much for your time today. It was really a blast talking to you. And I'm sure the listeners got a lot from this interview. So thank you so much.
Thanks so much, Luke. Keep up the great work.
You too.
So there you have it. I have been outdone. There is somebody more bullish than me in the Bitcoin space, but something we didn't really elaborate on in today's chat with Peter was the Bitcoin multiplier effect and what exactly is going to happen when the $900 trillion of wealth in the world tries to flow into the limited 2.1 million Bitcoins sitting on exchanges today for sale. If you want to learn a little bit more about the Bitcoin multiplier effect, I recommend you check out a video that I recorded on that recently. You can find that one right there. And if you want to learn how you can become a billionaire with only $300, I recommend you check out the interview I recently recorded with the one and the only Luke Broyles. You can find that one right there. And with all that said, I'll see you guys in the next video.